world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Dan Ramsden. Dan is the Chief Financial and Strategy Officer of StockTwits. StockTwits is a social media platform designed for sharing ideas between investors, analysts, and traders. Founded in 2009, the company has been called one of the 50 best websites by Time magazine and one of the 10 most innovative companies in finance by Fast Company. StockTwits has massive numbers in terms of active users and average time on site, which Dan gets into in today's conversation. I thought this chat was fascinating. Dan is an extremely insightful and eloquent guy with broad intellectual interests and years of experience in the markets. The conversation covers a range of topics, including network effects, the impacts of the real-time, free flow of information, behavioral economics, social networks, and human nature. Connect with us on Twitter @Rebank Podcast, on LinkedIn, Facebook, YouTube, or our website. If you like today's show, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Dan Ramsden. Dan, welcome to Rebank.
Thanks for having me.
So you're the Chief Financial and Strategy Officer of StockTwits. Can you tell us a bit about StockTwits?
Of course. StockTwits is the largest social network for investors and traders, or really any followers of financial markets, students, research analysts, etc. We have approximately 3 million monthly uniques as an audience, of which approximately 1.3 million are registered users, posting something like 4 million messages every month. This is all growing rapidly, and it's been growing year after year since our launch, which was in 2008. We think we have defined the category that we lead, which we refer to as infosocial. And in our case, the infosocial network category includes the exchange of ideas, information, charts, graphs, research reports, opinions in a social context. In other categories, such as professional and consumer products and so on, you may have comparable networks such as LinkedIn or Yelp or others, which in some ways are also infosocial in nature. We serve that function, we believe, in financial markets for the individual user.
I think you told me last time we spoke that your kind of average user engagement, daily user engagement, time spent on the site or in the app is just stratospheric. Can you remind me that number?
We currently, our current data shows that minutes per day spent on our platform online is in excess of 51 minutes. Which is, as you refer, I think, stratospheric. I think the only other network that shows that kind of number is Facebook. Many of the others, and I really can't speak for the others, but really the research that I've seen indicates that, Twitter, LinkedIn, Pinterest, Instagram, etc., are more in the teens. So I think the 51 plus minutes per day in our case, which I can speak to, is an indication of the passion and the dedication that our users have to the subject matter. This is a very important thing for all of them. And it's something that they have a true commitment to and a true interest in. And I think that translates to the engagement that you're seeing on our social network.
Yeah. Well, I mean, you guys have found a very deep and passionate niche, and you're obviously doing a fantastic job for them. So, in my mind, just to really simplify, it's kind of Twitter plus Seeking Alpha, like super detailed investment analysis and commentary, plus a real-time interaction and conversation in kind of a flowing feed sort of format. Is that fair?
I suppose. I suppose. I mean, I think it's Twitter in the sense of dynamic interaction, engagement in real time, conversation and discussion threads that happen constantly around specific subjects, which in our case is stocks, other types of securities, more recently also cryptocurrencies, which have become quite popular on our network. Seeking Alpha, I guess, in the sense that it's all financial in nature. I think one of the main differences between us and a Seeking Alpha is, in fact, the dynamic aspect of what we do and the real-time conversation that is not only continuous, but also very fast, especially around certain times of day or certain times of the year, such as earnings season, where the conversations are extremely quick and extremely impassioned, as you can imagine. So it really is, I think, the online digital equivalent, if you will, of the image that you often see of, the markets of days gone by, where you'd have floor traders, throwing their arms around and pieces of paper flying all over the place, and, maybe around the rafters, you'd have the spectators looking on and reporters and whatnot, and the constant news that feeds through all of this, which is, I think, what the markets were like at one point, maybe before our time. That's at least what the images tend to show. So if you would take that and translate it to an online equivalent, in many ways, I think that's StockTwits.
Mm-hmm. How would you characterize the, I don't want to say the average user, but kind of typical use cases? Are these retail traders kind of, in and out quickly? Are they institutional investors looking for new trade ideas? Are they journalists covering, financial stories? Are they, job seekers looking to prove what great investment analysts they are?
Well, I guess the quick answer is yes. It's really all of that. And all of that is a very pertinent use case and reason to be on our network. I think the way we like to think about it is, these are all individuals. These are regardless of whether they are individuals who do only this or individuals who do also this, meaning follow markets and are active in it. It really doesn't matter. These are all individual voices with individual opinions and individual interests that all relate to financial markets in one way or another. That's what brings it all together. It was really interesting, actually, along these lines, that a while ago I had seen a commentary by Joe Weisenthal of Bloomberg, who was referring to Facebook as, not quite being the community that it claims to be, or at least, The fact that Facebook refers to itself as a community is a little odd, given that, sure, there's a community around yourself and your friends and family, but to think of 2 billion global users as a community is probably not accurate. And I think that's right. In our case, by comparison, I think it actually is a community because we actually do tie together a common interest and a common bond, which is financial markets. And our millions of users, even though that would seemingly be too large to refer to as a community, in fact, I think the description is accurate. Because the shared interest actually makes it that. It makes it, in fact, a community, which is very exciting to see and probably pretty unique. I don't think the same can be said for Twitter. I don't believe the same can be said for Instagram or really any of the others. I don't think any of us would think of those places as communities. But in our case, I think that is true to say and very special.
Yeah. Well, I love the fact that despite being what, some in the space, no doubt, some in our audience, fintech audience, might think of as a fintech company or a technology-enabled financial services play. It's not that different, I suppose, conceptually from other platforms that have supported conversations about the markets in the past. But actually, you don't seem to be thinking of yourselves as a fintech. You seem to be thinking of yourselves as a social network and thinking of your industry peers as the Instagrams, LinkedIn's, Twitters, and Facebooks of the world. Which I guess one suggests that maybe we need to broaden our definition of fintech, and two that you guys spend a lot of time thinking about concepts like network effects, like knowledge of crowd, power of crowd, these sorts of concepts. If I recall the last time we spoke, we got into a bit of that. I mean, I think with your chief strategy officer hat on, it sounds like one of your areas of interest is kind of networks and communities and how they work. Mm-hmm. In what ways has StockTwits kind of approached this from a network effect standpoint, and how have you seen that play out?
Yeah, no, I think that's exactly right. Before I get to your question, that is exactly the way to look at it and the way we look at it. We tend to look at the universe of companies and competitors and platforms and so on as bifurcated into two main components, if you will. On one side, you would have products and services, including technologies. And so, fintech, in the very narrow sense of that word, is financial technology, which is a technology. It's a product or a service that uses technology or that enables technology in some fashion as it relates to finance. In our view, product services, including technologies, have very limited lives, and increasingly so. They are there to be disrupted. They may disrupt in their own turn. They probably do. But then they too become exposed to that threat of disruption. And nowadays, because everything is software-based and the disruption happens faster and faster, that becomes a greater and greater threat. On the other side of the spectrum, you have networks, which include marketplaces and platforms and exchanges and communities, as we've talked about, and so on. And those are any kind of systems that are characterized by network topologies and benefit from network effects. They could be very different from one another. They could be one directional or multi-directional. They could have many different dimensions. Their topologies could certainly be quite different from one another, and their use cases could be quite different from one another. But what they have in common is that these network effects and the texture of the network topology makes them very difficult to disrupt, and disrupt in the sense of becoming obsolete in a very rapid period of time. We believe we're in that category. Now, having said all of this, networks depend on products and technologies and services in order to be relevant to their community or their user base or what have you. And by the same token, products and technologies and services benefit from access to networks for their distribution and for their relevance. So they go hand in glove. They both depend on one another in various ways. So to your original question about do we consider ourselves fintech, I think I would probably say we consider ourselves, as already pointed out, to be a network, which is very important. But we definitely use technology, which I suppose you could refer to as fintech, in order to exist and in order to create products that our users enjoy.
So I'd be interested, given where you sit, you must see a lot of, I don't know, you must have observed the way that people are interacting with the platform, the information on the platform, and then you must be able to observe real-world effects as a result of that. I mean, it's interesting to think about these concepts that I referenced before, the knowledge of the crowd versus the influence or the power of the crowd, and those two things may not always be equal. We've seen through social networks and other platforms, the kind of support of some interesting political developments over the past few years in a number of countries. Populist movements and votes swinging in interesting directions as a result of crowds maybe having more influence and power than they always have knowledge in retrospect. Do you have any thoughts about that tension?
Yes, absolutely. And I think, in fact, in financial markets and the network that we manage, these issues are extremely pertinent and probably very clear to observe. I think the best way to answer that question is to kind of go back to the basics and differentiate between what is knowledge and what is interpretation, and how influence shapes both of those things. I think we need to be careful, and we are, and especially in financial markets, that's a very critical distinction, that knowledge is actually a very scarce commodity, and interpretation is quite prevalent. Knowledge is rare. Very few really have it, especially in financial markets. Interpretation is the way that we use the little bit of knowledge that there is, or the way that we use others' interpretations. So the community in financial markets is an exchange primarily of interpretations of facts, I believe. True knowledge is something that, is relative, I suppose. And that's probably not only true for financial markets, but more broadly. But the interpretation part becomes really critical because some participants in markets and in networks, and not only in social networks like ours, but in all social networks, or really all networks, many participants have more influence than others. There are certain clusters that are more popular than others, that have more connections or deeper connections. There are media companies, for instance, that have more audience and that have editorial voices that carry greater weight. The same is true for networks, but a distinction, though, that we pay a lot of attention to, which I think a lot of other networks also do, and other media companies, is where the line gets crossed between distributed and hierarchical. In a hierarchical system, you have an editorial voice that dictates a lot of what is communicated, or dictates a lot of how the network is to be used. And then you have the community, which is probably not a fair description when you're talking about a hierarchical system, but you have a user base that is subjugated to that hierarchy. I guess one example would be, let's say, a media outlet that broadcasts certain opinions or news or what have you. And we pay attention to that, we absorb that, we don't really communicate back to that editorial voice, we just take it in, and we can either accept it or not accept it. In the case of a distributed network, the communication happens in a more democratized fashion between the participants, with limited, if any, editorial voice that stands in the middle of all of that. What we work really hard to do is to fall into that category and to make sure that we do our job as a network that allows our community to participate actively with one another in a non-hierarchical fashion. Now, there are going to be certain areas of our community, certain participants who have greater followings and are more active in the communication and the dynamic that I've described than others. But overall, our network is very widely distributed, and it's important for it to be that way. So coming back to your original point about the popular aspect of all of this, I suppose that if in a true distributed network mechanism, then certain opinions emerge as the opinion of the crowd, if you will, then yes, then I guess then you have true, influence of the crowd. If on the other hand, you have the influence of a hierarchy that sort of resembles a crowd, but is in fact a hierarchy, then that becomes a little bit more difficult to pin down, and it becomes a little bit more distorted. There are cases in the market, which is when market bubbles happen, presumably when the distribution and the multitude of voices, become unified, and the markets tend to move excessively into one direction. Maybe that happens in politics as well, as you've described, but that's not an area that I follow as actively as markets. But it does happen in markets. We've seen that tends to correct after a while, probably also by the power of the crowd, which then shifts or moves to where the point should have been, perhaps in the first place. But it's a fascinating area to follow, and StockTwits is a really good laboratory, if you will, to observe all of this taking place in real time.
Yeah. Well, this is actually kind of maybe an interesting segue into crypto, because in my mind, is as you were talking there, those last kind of point or two. It was basically describing what has been going on in cryptocurrencies, call it, second half of 2017 to, I don't know, maybe very, very early this year. So you mentioned you added crypto coverage recently. What has that been like? I guess, firstly, what is the user interest been in that? I imagine significant. And two, have you seen the same sorts of dynamics play out around tokens as you did around traditional public equities?
Yeah, that's a really interesting subject. Yes, we introduced crypto tokens, coins, etc. Into our network quite a while ago. I guess maybe it may be close to a year ago. The way it works, just so you know, the way that people have the ability to follow stocks on our network is with what we refer to as a cash tag, which is a $ in front of a ticker symbol. And discussion threads emerge from that. If you post a message with that ticker symbol and the $ in front of it, then it gets categorized and it can be tracked as part of a discussion thread around that ticker symbol. And we've done the same thing with cryptocurrencies by using the same type of protocol with the $ and the ticker symbol, if you will, with a .x suffix. So all the .x suffixes in our network are cryptocurrencies. And so, for instance, BTC.x would be Bitcoin, and ETH.x would be Ethereum, and BCH.x is Bitcoin Cash, and XRP.x, and so on and so forth. And yes, that has become a very popular way to use our network, and the community has been very active around those discussion threads. We've seen, in fact, that the discussion was much more animated around the December-January timeframe, when, unsurprisingly, we also saw a spike in the value of cryptocurrencies that has since then subsided. One thing that I personally think about a little bit is the extent to which that's correlated with the volatility of the market itself, in the sense that the market for a long period of time was relatively stable. I mean, it was going up, of course, but it was not particularly volatile, and which meant that for a lot of people, it presented a relatively tame trading opportunity, which allowed cryptocurrencies to emerge as a mechanism where somebody could trade in a much more volatile and exciting environment, if you will. And that peaked to some extent in that December-January timeframe, after which the market itself, meaning the stock market, became much more volatile. And it's interesting to see that from that point forward, the price of cryptocurrencies came down. And so I wonder sometimes if the interest in cryptocurrencies is inversely related to the volatility of public markets. And if that's true, if that says something about the use case of cryptocurrencies, which are not really currency at this point as much as a mechanism for traders to trade, and for speculation to take place outside of the traditional environment. I mean, that's a theory, of course. It's something we should watch. But in any case, it's something that's very fascinating to observe on our own network at StockTwits, and the way that the community discusses it and is active around cryptocurrencies as much as it is around individual stocks.
Wow, fascinating. I guess on a related, if slightly broader point, you've got years and years of markets experience. In your view, and based on what you're seeing, do you feel that this kind of real-time, always-on information access is leading to more or less efficient markets? I mean, are markets becoming better or less good at appropriately pricing assets?
Well, I think at the market level, I believe that manifests itself in increased efficiency. At the individual level, it may have the opposite impact, meaning that at the market level, and the market being a clearing mechanism for price of multiple participants, and ideally many participants, and great fragmentation of opinions and viewpoints and transactions and action. So at that level, when you have that type of fragmentation, presumably the clearing point is going to benefit and become better as information becomes more readily accessible. However, I believe at the individual point, for each individual user, too much information that is absorbed too quickly with not enough time to reflect could actually cause an inefficiency to happen. So I think it's really relative to the perspective and to the point of view that you have, whether you're looking at the very little picture of the individual investor or the really big of the crowd as an aggregate. And depending on which one of those you're referencing, I think the efficiency or inefficiency will come into play.
Yeah, well, it's actually fascinating to think about. You, I mean, you guys may have built the single biggest, all-time biggest. It's effectively a pool of market participants from all different parts of the market who are exchanging information and views and communicating in direct ways. Mm-hmm. What you guys have created, I mean, it feels like it's one of a kind in the history of markets.
Well, it's certainly one of a kind in the history of digital technology and digital networks. But I think there is some truth to what you're saying in that digital technology and digital networks has made it possible for geographically dispersed voices to coexist on a single platform. And that's truly exciting. I think the geographical boundaries and physical limitations that we had before have largely gone down. And I think that is the critical distinction that we're talking about now. I think, markets have existed forever, but they, by the same token, were also confined to geographical limits. That's beginning to change now as well for the overall markets and not just for social networks. And I think our network is a reflection of that as well in, the increasing openness of markets, but also the increasing openness that's the result of digital technology and mobility and online communication, etc. We are all here extremely excited about the possibilities of all of this. And so I think StockTwits is really at the center of it, and is a really fascinating platform to watch.
In your view, kind of looking forward, how do you expect investments and trading to change over the next few years? You referenced that, I don't know, whenever, when it may have been 40s, 50s, 60s, kind of floor of the stock exchange. I don't know, maybe as recently as the 1980s. We've obviously come a long way since then. Presumably, it gets increasingly digital. How do you expect things to develop from here?
This is my own personal view, obviously, and so I don't know how much it's worth. So I'm in this case the individual in the crowd. So my individual voice, I guess, is that I believe it really comes down to interpretation. Despite the fact that artificial intelligence is going to play a larger and larger role in the trading mechanism. And so, this is, I had this conversation recently, in fact, at one of our events with one of the guests who I was chatting with there. And we were talking about artificial intelligence and mechanized trading and high frequency trading and so on, which is becoming more and more influential in financial markets. And so if you think of it in theory and you extrapolate that to an extreme where, let's say, markets are dominated entirely by artificial intelligence, presumably there comes a point where the AI systems converge and because math and data science presumably leads to a unified point where the conclusions are essentially the same. And if everyone adopts the systems of artificial intelligence and so on, broadly, then the markets increasingly will, as a result, in that extreme scenario, break down because there will no longer be a difference of opinion. And that, in that extreme scenario, will cause the individual voice, which does not have access to the microsecond decision making and gigabytes of data and terabytes and so on, but is just the individual making one's own conclusion and determining one's own interpretation of what it means. At that point, that then becomes the price opportunity, because that then becomes the individual's voice over that of the mechanized trade, to supersede and to become the more opportunistic. That's an extreme scenario, but I think that may be the case now as well, in that, the mechanized systems that are increasingly seen in all financial markets could actually create the opportunity for the individual investor with a long-term perspective to identify unique gaps that the machines not only don't necessarily identify, but could actually create because of the fact of being machines that are subject to the limits of algorithms and formula that in the real world maybe is not quite as important as the interpretation of the formula. So to the extent that the individual has the ability to interpret and to transact based on that interpretation, and to the extent that the individual has the ability to be patient and sometimes overrule that interpretation consciously at different points in time, then perhaps we're actually in an environment now where the opportunity to invest is greater than ever because of the popularity of machine trading that is otherwise dominant in the markets. I mean, it's very interesting to think about, and I think about it all the time. But obviously, this is just one way of looking at it. And so one guy's opinion presumably is as good as someone else's.
Well, one guy that's watching hundreds of thousands or millions of daily active users interact with an investment platform and trade off the back of it. I feel like it carries some weight. But it's good to know that there could be hope for the retail investor.
Yeah. I was just I was reminded of this picture that I always come back to, which is somewhat amusing. I forget where I saw it, but it's this black and white photograph of a server farm. And so you've got these racks, these long rows of servers, and it's all gray and there's nobody there. And all you're seeing is metal cases in a black and white picture, that's mostly gray. And you can almost see the silence in the room, other than maybe the hum, of the air conditioning and so on that has to be there for the servers. But the stillness of it all is quite grabbing. And the caption under the picture reads, "Panic in the markets," which I always find to be kind of amusing.
Dan, what's the best way for people to find out more about StockTwits and connect with you guys?
The best way is to go onto the platform, register, engage, use it. You don't have to register or engage in order to use it. You can just be an observer, and you can access any of the features that we offer, including ideas and lists and learning devices. And you can follow any of the threads and the discussions that happen on the platform. What you can't do if you're not registered is to also post your own messages or to reply or to share and so on. But it's very easy to register. And so that's something that we highly encourage, obviously. And we're open to everyone. So it's StockTwits.com, also available as an iOS and Android app on mobile devices. And there are all of these ways, whether it's online, mobile, anything. It's all been extremely popular, very easy to use, and getting better all the time with new features.
Excellent. Dan Ramsden, thank you very much for joining us today.
Thank you for having me. It's been a pleasure. Thank you.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.